Good afternoon, everyone. This is Christy from Ahn Co. It's Tuesday, August 13th. I'm going to go over the markets. Corn continued to slide here after USDA posted some negative news yesterday. Continue to find these sellers in the market and a lot of people trying to flush themselves out and just taking that risk-off stance. We closed at a level that we have not closed at since the beginning of May. There has been 4 other times this entire year that we have closed at or below these levels for December 19 corn. And that is telling you that this market has completely wiped out any sort of weather premium, problems with this crop, thoughts that this crop is not over a 2 billion bushel carryout, any sort of freeze production problems, anything of that. You're at levels that we were at when we thought we were going to plant over 92 million acres of corn and not a weather scare to be found. And so you have pushed this market a lot lower than many people thought, and we'll see where these support levels hold. We blew through a couple support levels today. 372 seems to be the next one for December corn, and then they have a lifetime low on December corn of 363 3/4. So we'll be watching that as well. Really, you have to wonder, why would corn push below that level or near that level with so much uncertainty left? But you have a lot of emotions at bay right now. When you look at meat market, or when you look at soybeans, up 9 cents on the day, able to separate themselves off a friendly USDA crop report yesterday. And then you had President Trump come out today, say that hopefully this time is the time China decides to buy large amounts of U.S. agricultural products. We have to wait to see. But they had a phone conversation between the U.S. and China. Sounds like U.S. is pushing some tariffs back until December, and also potentially looking at removing some for some health-related products. And that might be just a step in the right direction. We need to get trade talks back on a right path. They've been extremely cold lately. We still do not believe you will see a trade deal done until after the 2020 election, but at least if we could get in a better stance with them, find them buying some U.S. ag product, it could really help out these markets. Chicago wheat tried to come back today, couldn't do it with corn's negativity being about steady on the day, but Minneapolis and Kansas City continue to find pressure off the fact that they have some good crops that were just harvested and about to come, down 6 cents for Minneapolis, down 8 cents for Kansas City. Meat markets had expanded limits today. For cattle markets, live cattle closed expanded limits lower today of 450, so you'll see that increase once again. Feeder cattle closed just above those expanded limits, so you shouldn't see them tomorrow. They should go back to their normal 450, but about 667.5 lower. One contract did close limit lower, but not consecutive ones, so you shouldn't see expanded limits. And then hog market down 250. Outside markets got a perk here. Crude oil up over $2. U.S. dollar stronger as well. And down market over 400 points higher on the fact that it just sounds like maybe U.S. and China are stepping in the right direction. Moving forward, we're just going to have to watch what support lines hold in corn, and then continue just to watch the weather patterns. I do have to close with the disclaimer: trading futures and options involves risk loss and is not suitable for all producers. This is a solicitation. Have a great day.